The street bracing for another wild week next week. Earnings season resumes. Investors get key inflation data. So let's find out what is on our traders' week ahead watch list. Steve Grasso, you go first.
Yeah, I always look at initial jobless claims, and I've looked at this for my whole career on Wall Street, Tyler. It's one of the few leading indicators in the pack of economic looks that we get from the government. And now just think about what we've been talking about for the show for the last quarter, inflation. This is going to give us an insight to how the Fed sees inflation. Are they really knocking down inflation mentally, and what that number really looks like? So paying close attention to it, especially in the environment that we're in currently.
BK, what are you going to have your eyes on next week apart from inflation? You can't choose the same thing that Steve just did.
I can't. Yeah, so I'll take the derivative of that, which is interest rates, right? So one component of interest rates is the inflation expectation. And what we saw this week was when the 30 and 10-year bonds started to sell off, interest rates going higher, that's when the market really tanked. So for me, that's number one on my screen. I'm watching 10-year rates like a hawk for any indication one of two ways, either that they're going to go higher or the bleeding has stopped and maybe things have stabilized.
Yeah, and I think what was the 10-year today, 3.12. I think that's the highest since 2018, back in November of that year. Jeff Mills, what have you got your eye on for next week?
So I know everybody wants to know what the market's going to do in the short term. I think whenever you're talking about that, it's all about price action. It's all about technicals. That's what's going to tell the tale to let you know if a rally's real, if a rally's not. And maybe the two prices that matter the most, at least in my mind, are Apple and Microsoft. You know, will they save the day? So far, they sort of have. They're 13% of the S&P 500, but now they're testing very interesting technical levels. Apple, in particular, sort of having the battle of its life with that upward sloping line from October 2020. So we'll see what happens there. But just for context, you know, where could these stocks move, and then what might that do to the index? You know, from a valuation perspective, if these stocks give back half of their valuation premium relative to their average, so they retrace about 50% of their PE multiples, that's 10% down for Microsoft, 17% down for Apple. Will they get there? I don't know, but I think that's a reasonable reference point for those two names that I think probably will still break.
Watch Apple and Microsoft, says Jeff. How about you, Guy?
Well, I'll be watching you every day next week on Power Lunch, because that's what I do, Tyler. I mean, that's
tripling
one
the
thing,
audience right there.
I'll also be getting a little more granular. Semiconductors, you know, the SMH, some of these individual semi names, you know, Steve talks about it all the time. So much pull forward. Obviously, these stocks have not traded particularly well. AMD has effectively been cut in half since its all-time high. NVIDIA not trading well. You need stabilization in the semis in order for this broader market to find its footing. So I will be watching the semiconductors, Tyler.
I'm going to close this block with a real quick question, quick answer, Jeff Mills. If I am scared, is it too late for me to sell?
The answer is generally yes. And my simple answer, and this is real advice, you don't want to have to be smart twice. I don't even like to have to be smart once, but you got to get out and then you have to get back in. And I can't tell you how many people looked smart in 2008, looked smart in 2020, never got back in, missed out on a lot. You've got 50% of the S&P 500 down 20% or more. It's a hard game to play.